Let us go into now evolution of banking. So when the banking started, you can think of banking originated even before 2000 BC in Babylonia through the activities of temples and palaces. It started with the safe keeping of valuables against receipts in temples. How it started? It originated even before 2000 BC in Babylonia through the activities of temples and palaces. It started with the safe keeping of valuables against receipts in temples. Then it started in Egypt, Greece, and Italy. These countries contributed to the development of banking. If you look at the central bank of every country is the bank who controls the banking sector in each country. In India, it is Reserve Bank of India. Similarly, Bank of England is the bank who controls the entire banking system in UK. That bank marked the beginning of central banking in the world. So, the first central bank which came into the world is Bank of England. So, every phase of banking was from the year 1786 to 1969 in India. Early phase of banking was from 1786 to 1969. The General Bank of India was the first bank which got set up in India in the year 1786. Next came Bank of Hindustan and Bank of Bengal. The Bank of Hindustan and General Bank of India were just wound up after some time. After that, the East India Company, which were ruling India then, started certain presidency banks. They are Bank of Bengal in the year 1809, Bank of Bombay in the year 1840, and Bank of Madras in the year 1843. This Bank of Bengal was originally started as a Bank of Calcutta in the year 1806 and got renamed as Bank of Bengal in the year 1809. Evolution of banking. In 1865, Allahabad banking was established exclusively by Indians. In the year 1913 and 1948, there are certain bank failures happened. In the year 1935, Reserve Bank of India was established. In the year 1969, nationalization of banks happened. That is, most of the banks which got nationalized by Government of India. It means those banks have become Government of India banks, which has happened in the year 1969. In the year 1990, we have seen certain banking reforms. Let us talk about various acts enacted in India. To start with, in the year 1949, enactment of Banking Regulation Act. If you see 1955, we have nationalization of State Bank of India. So till such time it was owned by different people, but in the year 1955, State Bank of India got nationalized. And in the year 1959, certain subsidiary banks of State Bank of India like State Bank of Bikaner and Jaipur, State Bank of Mysore, those banks got nationalized in the year 1959, which are called associate banks. There are 7 associate banks which were functioning with State Bank of India in those days. In the year 1961, insurance cover extended to deposits. That is, if you deposit some money with the bank, that deposit is covered by an insurance cover. That cover is available up to 1 lakh. Now, recently, the Government of India has changed that particular amount from 1 lakh to 4 lakhs. Now, in the year 1969, banks were nationalized. There are 14 major banks were nationalized in the year 1969 through an enactment in Parliament. In the year 1971, the Government of India created the Credit Guarantee Corporation. Similarly, in 1975, the regional rural banks came into India. Again, in the year 1980, there are 7 more banks got nationalized. And in the year 1990, there was a banking reforms. Government of India allowed private people to come out with new banks so that banking can be extended across the country. In the year 2000, we have seen globalization. Under globalization, if you look at more number of bank branches have opened, there are many people who got into the banking sector as employees, and more people also got the banking as a facility to transact their own banking activities. This was under the regime of Mr. Narasimha Rao, who was then Prime Minister, and Mr. Manmohan Singh as the Finance Minister of India. When we talk about post-2000, in the year 2004, IDBI enters the banking sector. In 2005, Banking Ombudsman formed. Who is a Banking Ombudsman? He is the person who can handle the queries or the complaints made by various customers of various banks. We have one Banking Ombudsman sitting in each Reserve Bank of India branch at state capitals. His main job is to take care of the compliance made by the banking customers. In the year 2007, there is an introduction of check truncation system, which is called, in the short form it is called CTS. Then in the year 2012, debit card, which has been issued in the name of RuPay. This is the Indian version of a credit or a debit card, which is launched by National Payments Corporation of India. In the short form it is called NPCI. In the year 2013, Bharatiya Mahila Bank was formed, but subsequently in the 2017, the Bharatiya Mahila Bank got merged with State Bank of India, and the associate banks of State Bank of India have also got merged with SBI, and the SBI joins the league of top 50 banks globally in terms of assets, with effect from 1st April 2017. In the year 2018, India reaching a significant milestone in digital banking. The value of card usage at point of sale, the POS is called point of sale, touching at around 1 lakh crore rupees, which is a phenomenal achievement as far as the banking is concerned. So the following figure represents the different phases of banking in India. If you look at, there is indigenous region, direct intervention of the state, something called liberalization, then we have transition, then we have entry of foreign banks, and entry of banks with technological innovation. Indigenous, if you look at pre-introduction of banks or pre-independence periods, people used to go and take money from the local people who can give money against gold or against a property or against any item. That is the way the banking started. And after some time, there is a direct intervention by the state. Then the banks have been, the government has allowed private people to start banks. So many banks have been started in India. Then the government came out with a liberalization. So more banks came into picture. Then transition, from liberalization to transition. So apart from banking, banks have started giving various facilities to their customers. Then the government of India has allowed foreign countries to start their own branches in India. Vis-a-vis Indian government also got a chance to open our own banks in different countries. Then entry of banks with technological innovations. If you look at the banking as on today, it is totally technologically advanced. Even you need not visit a branch. You can conduct all your banking activities sitting at home, either through your mobile or through internet, so that one need not visit the bank branch to have his banking activities. So banking continues to evolve in scope and specialization. The financial health of the Indian banks has improved immensely over the last decade, primarily due to the efforts of Reserve Bank of India. Now let us have some quiz program. Just think it over. Who issues the currency notes in India? Who issues the coins in India? Name the various mints. That is, mint means who are issuing coins are called mints. So name the various mints issuing coins in India. What are the various denominations in which currency notes are issued in India? Can you name some 5 public sector banks in India? Similarly, can you name some private sector banks in India? Just think it over. We can come out with the answers. Now let us start with the currency notes. If you look at under section 22 of Reserve Bank of India Act, RBI has sole authority or RBI has the sole right to issue currency notes of various denominations except 1 rupee note. The 1 rupee note is issued by Ministry of Finance, Government of India, and it bears the signature of its finance secretary, while other notes bear the signature of the Governor of Reserve Bank of India. So basically, who issues the currency notes? Except 1 rupee, all other currency notes are being issued by Reserve Bank of India, and 1 rupee note is issued by Government of India. Then coming to coins, who issues coins in India? Again, coins are all issued for circulation only through Reserve Bank of India. Then name the various mints issuing coins in India. We have around 5 mints in India, which are all owned by government. They are situated in Mumbai, Alipur, which is in Calcutta, Safiabad, which is in Hyderabad, again Cheriyapalli, which is again in Hyderabad, and finally we have one more mint in Noida in Uttar Pradesh. So there are 5 mints available they're all functioning under Reserve Bank of India, and these 5 mints are producing coins or minting coins, either way. What are the various denominations in which currency notes are available in India today? As you are aware, currently the notes which are issued in the following denominations start with 5 rupee note, 10, 20, 50, 100, 200, 500 and 2000. Reserve Bank of India is not issuing any note for a 1000 rupee denomination. Please note that. After 500 we have only 2000. These notes are called as bank notes because these notes are issued by Reserve Bank of India. Name 5 public sector banks in India. We have more than 20 public sector banks in India. Can you name just 5 banks? Okay. The 5 banks start with State Bank of India, Bank of Baroda, Punjab National Bank, Indian Bank and Central Bank of India. If you look at the private sector banks in India, we have ICICI Bank, we have Axis Bank, we have HDFC, and we have City Union Bank, and we have Kotak Mahindra Bank, of which the City Union Bank belongs to a category called old private sector banks. All other banks, ICICI, Axis Bank is presently called as UTI Bank. So ICICI Bank, UTI Bank, HDFC and Kotak Mahindra, they all belong to new private sector banks, whereas City Union Bank is the old private sector bank. It's more than 50 years old. So in this session, what we have learned? We have learned money evolved as a store of value. It is a medium of payment. It's a common measure of value. Again, it is a means of payment. And finally, it is a unit of account. Money is best defined by its function as anything that is widely used for making payments and accounting. The 3 characteristics of money are, so they are durability, portability, and divisibility. So coins and currency notes, when deposited into a bank, it's become intangible money. That is, you cannot have it physically with you, whereas the money is being deposited in the bank against your name, and they kept the money on your behalf. That is why it is called intangible money. Banking continues to evolve in scope and specialization. Banking in India has entered the following phases. To start with indigenous region, direct intervention of state, liberalization, transition, entry of foreign banks, entry of banks as technological innovations, and finally, the financial health of the Indian banks has proved immensely over the last decade, primarily due to the efforts of Reserve Bank of India. With this, we are concluding the session on evolution of money and evolution of banking. Thank you.